It's heating up here in NYC, which means summer is almost upon us. It also means it's nearly time for my summer vacation. And this year, I don't have to stress about my finances because I know they are better organized and I can enjoy myself without worry. Monarch is the personal finance app that tracks everything: accounts, investments, saving goals, and spending. Get your first year of Monarch Core for just half off, just $50 with promo code REALVISION. Indeed, without Monarch, I don't think my upcoming vacation would be stress-free, because now I know and I can see my finances all in one place. Not only that, with their unique features, I know my portfolio is outpacing the S&P 500. But my favorite thing about the Monarch app is their AI insights, which help me understand, am I spending more or is it just inflation? Use code REALVISION at monarch.com to get your first year of Monarch Core half off at just $50. That's 50% off your first year at monarch.com with code REALVISION.
Happy Wednesday, everyone, and welcome back to Trading the Markets. This is the show where we take all your questions. We look at a whole bunch of charts and try and figure out what is going on in the market and which way we should be trading ourselves. So for those of you that are joining us, just remember you have to be an RV Connect member and above to ask Kris questions directly. Any question about any chart you want to see, any token price action you want to talk about, just ask it. And Kris is a wizard live with charts. Kris, happy Wednesday, my man. How are you doing?
Doing great. Looking forward to the show. I've spent the last little while digging through all the charts and lots to talk about today, for sure. So I'm looking forward to this.
Yeah. So, I guess we should start, as we always do, with the king of the crypto world, Bitcoin, right? So let's see what Bitcoin's doing and what we should take from it.
Indeed. So obviously there was a lot of excitement last week, kind of right after our show ended. It was starting to pivot a little bit by that point, but the end of the week was pretty ugly, and here we are now. So I remember last week I was talking about I wanted to see us get back down to this 200-week simple moving average, which is this yellow line, which is basically the bottom of this moving average cloud here. And we hadn't yet gotten to it. And this had been previously the kind of the big line in the sand for Bitcoin historically in all of its bear markets. Now, last cycle, we did break down below it due to FTX and a few other things. But largely, barring any crazy meltdowns, this has historically held as the big line in the sand and shown to be kind of the Bitcoin bottom range. So I think you could argue that we're firmly in a bottoming pattern at this point. Now, that doesn't mean that the bottom is in and it's time to buy and it's off to the races from here. I'll get to that in a minute. But I think I can say at this point that we're much closer to the end than the beginning at this point, and we're starting to tick off major check boxes along the way of what sort of constitutes a bottoming pattern. Now, a bottoming pattern doesn't mean, again, the bottom is in. Bottoming pattern can last months, and they often do. And so that's still a good sign. One of the things I'm looking at here that I did call out last week was this bullish divergence here. Noting how in the previous dip back here, let me turn on my highlighter real quick. In the previous dip back here, we had a really low RSI, and then in this most recent dip, over the weekend and week, we have a higher RSI, and the RSI itself, the moving average line, is pivoted to the upside, and this didn't get as low here as it did back here. So this is bullish. This basically means that even though price got lower, the momentum to the downside, I should say, is still not as strong as it was earlier on. So this shows us that this also sort of lends weight to the idea of a bottoming pattern. We can if we look back at other down bottoming patterns, for example, we can see something kind of similar here that I think I called out on the last show too. We had an ultimate low here, and then RSI kind of started trickling back up. And even though we had subsequent price lows, the RSI was kind of setting higher lows throughout. And then going back to 2017, same kind of thing here. Although, well, price was actually going up here too. But anyway, you get the idea. The idea being this is sort of typical of a bottoming pattern. We see a big initial surge to the downside, and then we see subsequent higher lows in momentum, showing us that, you know, the selling momentum is waning. And I think we're starting to see that here. So this is all constructive to me. This is obviously what we need to see. However, in the short term, I'm not convinced that like the selling is over yet. We might still see less downside pressure, but I think the selling is not over yet. And so one of the things that I sort of discovered that I want to talk about here is the weekly megatrend. I remember when this flipped green back in April that I was skeptical at the very least, you know, that this was going to last. I was like, I think this is good. This is bullish. We know we had this big counter trend rally, the longest counter trend rally in the history of Bitcoin bear markets. But I didn't think at that point in time that this meant that the bottom was in or that it was going to be blue skies from here on. And so always in the back of my mind, I was leaning towards probably a better than 50% chance that this wouldn't last. Yes, it would probably hold for a little bit as they do, but that it probably was going to turn back red again. And it did. And so I got to say, in terms of like me managing the model portfolio reports that I do, kind of kicking myself. It's like I had to go with the technicals because they were what they were. And I wasn't expecting such a big drastic just blow through the floor that we got here to flip this red, which is kind of a bummer because you have to be quick on the trigger of something like that. So just looking here, we can see that this doesn't, when this flips, whether it flips red or green, it doesn't typically flip quickly. It usually stays for, I mean, we're looking at a minimum of probably a couple of months, if not much longer. So, you know, I don't think that this, we're going to flip back bullish here anytime soon. I think that this is going to require a bit of distribution, a bit of consolidation, you know, after such a drastic run down like this. And so we can see this if we look at it on the daily time frame, how it has just been kind of plodding sideways since then. Like we got this big thrust down, and now it's just kind of in no man's land. It's obviously way overextended in terms of deviation from the moving averages here. So usually when you get this kind of a massive run, you tend to get a lot of sideways chop, a lot of sideways price action while it consolidates. It did hit a DMARC 9 here, kind of at the tail end of this. So that's also a good sign that it was overextended and it's going to chop sideways for a bit. We'll probably see, you know, this RSI on the daily got way oversold. So we'll probably see this kind of consolidate a little bit. So I think we're due for just some kind of meandering sideways chop on the daily and probably on the weekly for that matter too. And then what I'm looking for ultimately in terms of, like, I feel like I've seen in the Discord, a lot of people are like, oh, this is the major flush out. This is going to be the bottom. It's time to start slowly buying back in. And I don't know if we're there yet. I think I want to caution people in terms of starting to buy back in, particularly with alts, but even with Bitcoin. I could say in terms of like a dollar level, this is probably a decent level to be buying Bitcoin. Like certainly if in a year from now, you're saying I bought Bitcoin at 62, nobody would be laughing at that. Everybody would be like, yeah, you did good there. That's not to say it can't go lower, but I think that, I think this is a reasonable price to buy it. But from a time perspective, I don't think we're anywhere close to the bottom fully being established. I think, and we kind of touched on this last week, that, you know, we've got potentially 3 to 4 months, I feel like, where this pattern could continue to plod sideways. So if you look at this and go, well, this is probably a good level to buy at, but also we've got 3 to 4 months potentially before we start to see a material upward shift in sort of the weekly trend reversals, that would give me pause. That, to me, I think, well, if I got to wait 3 to 4 months, there's a very real chance that we could see some lower lows, you know, and I still call out the low 50s as a very realistic probability, you know, not saying it can get there or that it will get there, but or not saying that it will get there, but it definitely could get there. And so, like, yeah, if you want to start DCAing into Bitcoin, I would say maybe start chipping at it here. Don't go all in. Don't go in with any real amount of size yet, but either start like a slow DCA schedule and just start chipping at it here, knowing full well that we could possibly get down into this lower range. But also we might not. Also, we might just hover in the low 60s to low 70s for the next 3 to 4 months. And really what I'm looking for, it's like, when will I know that we're kind of back on again and it's time to really be fully allocated? What I'm looking for, obviously, is for price to be above this 200-day moving average cloud, which we can see we were up at it back, last month, but now we're about as far away from it as can be at this point. And so we're nowhere close. And what I feel like is likely going to happen here, what I feel like is the most likely scenario, isn't that we just, here, let me draw like a line here, isn't that we just go rocketing up through it like this, I think it's more going to be a scenario where we kind of just plod sideways. Plod sideways like so, give or take. And meanwhile, we wait for this moving average to kind of just come down and meet it and meet up with it. And then when that happens, it'll just naturally start to cross up over it on its own without requiring like a lot of extra juice to really push it up through. We'll just start to see the two sort of converge. And you can see that just the rate that this is going, sort of the trajectory that this is going, it's not likely that it's going to be something that's going to happen in the next 3 weeks or a month or something like that. It's something that's going to take a little while. And again, if we go back and look at previous cycles, you can see that that's typically how that plays out. Like, let's just go back to the previous. Like here, for example, we kind of started talking about the bottom being in, I remember in 2022, we got this big flush out off the back of the 3 Hours Capital. Let me kind of get rid of some of this clutter here so we can see what's going on. We got the big flush out off the back of this 3 Hours Capital, and then it just plodded sideways for a long time. But a lot of people were like, oh, the bottom is in, the bottom is in. And technically it was. Like, this was the low for a long time at 17,000, and it went sideways for almost 3 months off of here. Meanwhile, here's the 200-week moving average cloud, kind of just slowly catching up, slowly grinding down. And then, at the end, we got this FTX collapse that created arguably a little bit more of an artificial low. This wouldn't have gone down, obviously, were it not for that event. And we would have gotten the crossover sooner. And so this did run up out of here, but this was more reflexive based off of this crash here. It wasn't like as natural, but still, you can see how we went sideways for a long time, even though we thought the bottom was in all the way back here. And this is what we ultimately needed to have happen. It wasn't till really this crossover took place on this 200-week moving average cloud, or day moving average cloud, that really we were sure that we were in a new regime at this point. And then if we kind of go back and let's look at the other one, let's look at the previous bear market too. Same kind of thing here. We had this held the 6,000 level for months and months and months, and everybody thought, well, this is probably going to be the bottom. And then we got this final capitulation event that really dropped it another 50%. And we had to kind of wait. We had to wait a little while until really the 200-day moving average cloud caught up with it, and then we had this crossover again. So let's go back to where we are now. We can see this is very much the typical pattern that we're looking for, and we're not there yet. And in fact, we're moving the wrong direction. So we need to wait for this to resolve. It's not something that's going to happen in a week. It's going to probably take 2 or 3 months or 4 months maybe. If we look, God, I hate trading view sometimes. It makes me nuts. If we look at we talked about this on the monthly megatrend too. Very much the same deal here. Like, we're looking for a lot of sideways consolidation to let this megatrend come down and meet up with it, and then finally we'll get this kind of bump back up. Right now we had a big bump down in the wrong direction. This too is another solid illustration that this isn't something that's going to happen right away. This is probably 3 to 4 months worth of price action for this situation to resolve itself here. So that's what I'm looking at in terms of like the bottom. So I think, maybe price wise we're there, maybe not. Time-wise, I don't think we're anywhere close. So think about that in the back of your mind when you're like, ooh, should I be buying? Should I be jumping in right now? Probably not. Like let things kind of become more clear. And with alts, it's even less clear. There's a lot of alts that look terrible and are only getting worse. So I don't think it's anywhere close to time to start chipping away at things like Ethereum and Solana and SWI and things like that. There's a handful of alts which we'll get into that are well above their 200-day moving average cloud already. And those ones that we kind of talk about every week, those are the ones maybe you want to be looking at. But there's a lot of them that look like this, where they kind of came up and bounced off the bottom side of it. And then not only did they come back down to support, but they actually broke through support and are now in a lower structure. So they flipped this support to resistance now, which is another thing I think we need to keep an eye on, because like now this previous level back here with this range that we were in, that we were trading for really since February, is now resistance at 65,000. So now we have to like get back up and break back above through that. And that's going to potentially be difficult. So until we even, I'm not really looking at anything positive until we can show that we can get back above this previous support level, which again is now resistance, and show that it can stay back up in this upper range. And we can go through a bunch of charts here, but all the big L1s all look like this. They've all broken down through their the bottom of their range that they were holding since February, basically. And so it's, I think patience is the name of the game right now. Like, yes, it's positive, I guess, constructive, in that I think that a bullish pattern, a bottoming pattern is forming, but it's still very early days. And so just really be cognizant of where we're at from a time perspective and what really needs to happen, barring some insane catalyst that comes out of nowhere and rockets the price. And of course that can happen, but assuming that doesn't happen, because the odds of that happening are frankly low, I think that this is what, we need to look out for, is just a lot of sideways chop going into probably late Q3. And then we'll see where we're at from that standpoint.
Yeah, I almost think the event on the other way, catalyst to make us go down more is, I believe that was much more likely to happen than the catalyst to make us go up, just based off of the geopolitical backdrop and just the sentiment and all of that. So there is weight to that from a sentiment standpoint too.
You're completely right. And I would not at all rule out a dip down into this lower range, into the 50s. I mean, some people are even saying lower. I tend to think that this is probably the line in the sand, kind of down here, based off of this being, the previous lows back in this earlier huge consolidation we had back in 2024. Just also because just how everything is already very, very oversold. And from a timing standpoint too, I don't see it getting too much lower than this. So I'm gonna say this is, if we do leg down, this is probably the most highest probability scenario, I should say. Maybe we don't. Maybe we just go sideways here. Maybe we just, like, again, kind of plod sideways in this range here. But I can't rule that lower range out. And like I said, that would be obviously an even better buying opportunity, and all the more reason why you should not be going in heavy right now thinking that, the bottom is in, because it's quite possibly not. So, yeah.
I can't help but wonder how eerily close, especially like this 3 to 4 month time frame kind of lines us up right around October, mid-October, give or take. I can't help but think how eerily similar, or how much that aligns to a T with the 4-year cycle.
It 100% is the 4-year cycle. I mean, exactly. It's this.
Especially if that plays out in October. If we start coming around, it's this is literally it. Because October 2026, that's literally it. I mean,
it is. It is. So 12 months, the same as the last one before that, 35 months up, 12 months down, 35 months up, 12 months down, 35 months up. I mean, we're looking at 12 months down, and that almost lines up, that makes all the sense in the world, just kind of looking at this trajectory right here, So yeah, around the October timeframe very much makes a lot of sense. And right now it's got to be the base case, I feel like, regardless of what you think is pulling the strings or influencing any of this or what's going on. I mean, just from a purely mechanical, technical standpoint, I can't make a stronger argument for anything else but that, really, you know? Yeah.
All right. You mentioned some alts, so maybe we can get into some of those. But first, I want to take a question here from Walk Jive. Thinking about buying some LLY.
Eli Lilly, yeah.
Eli Lilly. Okay, that's a first for this show. What might be a good pullback level to wait for? Okay, so maybe before we deep dive into crypto, let's take a look at some Eli Lilly, because I have been seeing their commercials left and right. So let's see what they're up to.
Well, okay, so obviously, oops, hold on. Am I missing something here? Let's turn this back on. Okay. Where's my DMARC? I don't see any DMARC here. Hold on. What? I might have, oh, hold on. I must have deleted my DMARC when I was cleaning up that other chart. Here we go. Sorry about that. Well, anyway, forget about it. Okay, let's look at the moving average. I don't know what's going on here. It's obviously, okay, it's above its 10. It's overextended for sure. Let's see if it was outside its Bollinger Bands, but it's starting to come back in. We've got 4 bullish divergence flag here. We can see that momentum has waned a little bit too, where we had a previous RSI peak here, and then on the subsequent price high, we got a lower RSI peak. So, yeah, momentum is waning, I think, at this point. I think definitely at least wait for a pullback to the 10-day, which would be around 11.15. And then, potentially the 20-day too, though. But I feel like Eli Lilly has a lot of strength. Let's look at it on the weekly real quick here. It is obviously overextended on the weekly, but yeah, let it come back. I mean, it'd be nice if it could come back all the way to its 10-week. That's maybe a stretch at a little over 1,000. But I like it. I like it here coming back to at least 11.15, if not, whatever, 10.50. So those would be the levels I would look at. Eli Lilly is interesting to me because they're as much they're very much an AI play as well, in the sense that they bought their own data center. They bought 1,000 nvidia GPUs. They're training. They're using all of their historical drug trials and studies going back over 100 years to train their own private AI models to help sort of rapidly increase the time it takes to do drug research and development. And so they're in AI. They're as much like an AI company as they are a pharmaceutical company. And I think that they're doing really cool things, and they need to be acknowledged for that. So I think that this is something that's going to do well for a long time going forward. So yeah, even if even if you bought now and it corrected back down to even the 20-day or even the 20-week for that matter, I don't think you'd be bad off. I feel like this is one that even if it did do a real solid mean reversion right after you bought, yeah, it sucks. You'd be upside down for a minute, maybe a week or two, a month at worst. But this is something that's just going to keep going and keep grinding upwards for probably the rest of the decade, for that matter. So it's like, yeah, of course you want to be tactical and get the best entry you can, but is it really going to be the end of the world if you buy at whatever 11.30 versus 10.30 in the end? Probably not. So kind of think about that too. Don't kick yourself if you buy it and it goes down 5 or 10% in the short term. So yeah.
So there's not one like you would look at for like a swing trade type of thing. This is more like a buy and kind of hold.
It's a buy and hold. It's more of like, I would look at it as more like an AI portfolio anchor position, because it's a big market cap. It's over $1 billion. I mean, over $1 trillion rather. Excuse me. It's over $1 trillion, but I think it still has multiples in the tank. Because if you look at something like nvidia, that's a $4 trillion market cap. If you look at something like Apple, it's up around 3. So I'm not saying this has got a 10-bagger in it, but like this is something that you could easily see 2 to 3x over the course of the next 2 to 3 years or 4 years. So to have that be like a core portfolio anchor and still know you've got those kind of multiples in the bag, I feel like is a really solid approach there. And so this is something that I would feel comfortable with going into with even a decent amount of size, like a pretty high weighting, because of its low volatility, because of its super high upside, because of what they're doing and how they're innovating, because their AI narrative also, and because also not on top of their AI narrative, they're absolutely crushing it from the pharmaceutical standpoint with the GLP-1s. They're making all these amazing GLP-1s that are they're raking in cash from the GLP-1s, and they're using it to fund and build out all this data center, this AI stuff with it. And so they're not even having to borrow money to do this. They're flush, like the hyperscalers are flush, and the GLP-1s aren't going anywhere either. So they've got multiple amazing kind of revenue streams that are just, helping to propel them. So solid stock for sure.
All right. So there you go. Walk, jive. Don't kill yourself if you miss it, especially if you have a long-term time horizon on this one, as Kris so eloquently stated that you should. All right, Kris, let's dive into some of these alt charts. I have a feeling they're probably, if we see one of them, we'll probably see all of them.
Yeah.
But why don't we start with ETH, because BlackRock very famously sold a whole bunch of Bitcoin, I think $230 million worth of Bitcoin, and bought ETH with it. So what are they seeing that the rest of us are not?
I'm sure they're kind of holding on to the idea that tokenized assets, tokenized equities probably are going to make their way onto Ethereum in some form or another. But I'm not there yet in terms of, even if they do, there's no way that's going to make it onto the base layer. It's going to be on a layer 2, and that's not going to accrue a whole lot of value back to the base layer, the base token. So where is the accrual to the Ethereum token itself going to come from, even in that scenario? So unless Ethereum wildly restructures their network and goes back to some kind of monolithic architecture, I don't see how that's a boon to the Ethereum token itself. So I'm a little iffy on that thesis, but maybe they know something I don't. I don't know. Regardless, again, just like Bitcoin, broke down through its major support level. It's in a new sideways structure, well below it. In fact, it broke down through significantly more. I think its 20-day is also below the support level, whereas Bitcoin wasn't quite there yet. Its 10-day had barely just poked through it, but its 20-day was still well above it, whereas Ethereum, well below both. So well below for both. Again, it's probably oversold, just like everything else is, but it's got to make it all the way back up to 1939, just to get back up to this resistance level that it broke down through. So Ethereum, no. I'm not anywhere near Ethereum or Solana or SWI. Let's just kind of look at same thing. I mean, these are all going to be identical, like you said. Very much broken down through, both moving averages broken down through, super ugly, honestly, not going to lie. SWI, same deal. Hold on. Didn't mean to move that. Same deal, not quite as bad as the other two, but still a breakdown. Probably not quite as bad as the other two, just off the back of this bump that it had from the conference last month. But really, it's given back all of that and then some. So it's were it not for that conference bump, it would be down just as far as Solana and Ethereum would be, obviously. So yeah, I'm not there with SWI either. It's funny, Tron remains one of the ones. Although it took a beating here, to be sure. So I'm not loving this either. But objectively, it's better in that it is above both, its 200-day moving average cloud and its 20-week moving average cloud. And the RSI got fully flushed back out. So, and it's a DMARC 9 here. So if anything, Tron might be a decent buy the dip opportunity here, because it fully flushed out, but still held support on that 200-day moving average cloud, as opposed to being, leagues below it like everything else. So this one is kind of interesting to me. Also, this RSI flush is interesting to me too. So, I want to see how that resolves. That's one. XRP, same as the others. Breakdown through. BNB held the line, which is, I guess, a little bit constructive, but I'm not jumping into BNB either. I mean, it's still got rejected off of its 200-day cloud. So it's slightly higher relative strength, you could argue, than the rest of them, but still nothing special here. Near is one that we talked about last week. Near, obviously, that's a very different picture than what we've been looking at here in these recent charts. So huge run up, not a great looking bearish divergence in terms of the first peak RSI, peak here. We also had a DMARC 9 here, and then we had a subsequent combo 13 here with a lower RSI here. So this was exhausted. This was due a pretty big correction, which we got, but it also held the 200-day moving average clouds. So near looks okay. Its RSI looks to have been flushed out, a good bit too. So maybe this is a decent buying opportunity for near. I say this with, again, the caveat that we talked about at the beginning of the show. We've got a lot of time here, and we don't know what Near is going to do. Near, sure, it's got a bit of a narrative right now because of the AI stuff, with the AI agentic stuff that it's doing, but that doesn't mean that this is going to be is going to hold a solid uptrend for the next 3 months while the rest of crypto bleeds out. So yes, this looks good in this moment, but be very careful with this. Don't think that this is something different than everything else, even though it sort of is technically in this moment. I don't think that it's got the same, I can't put this one in the same category as I would Hyperliquid or Venice. There's not loads of cash rolling into Near in the same way that there is with Hyperliquid or Venice. So this is more narrative based. This is constructive, but just be careful with this one. Yeah.
Let's talk about, before we move on to some of the others, let's look at a chart that might look significantly different, which is Zcash. So just for some background, people, I'm sure you're all aware, Anthropic's Claude found a critical flaw in Zcash's orchard shielded pool. So basically the bug that was found allowed unlimited counterfeit Zcash to be minted. It was disclosed on June 5th. Zcash dropped quite a bit since then. But then developers moved pretty quick to create an emergency soft fork, which was followed by a hard fork. And then we've seen Zcash go up as much as 80% from the lows that we saw last week. So let's see where they're at now and how the chart's holding up.
I think it's important to clarify that while this exploit was discovered, there's no evidence that it was actually exploited. There's no evidence that there was unlimited amounts of unknown Zcash actually minted. I guess so. There's that, which I think is largely why we're seeing this bounce here, because it was more. Yes, it was real, of course, but it wasn't actually exploited, as far as we know, unless somebody's sitting on the side for 2 years with a bank load of Zcash that, there's always
so private that it could be possible. Zcash, one thing it's proven is that they do what they say they do. So I guess, some solace.
It is worth saying that there's no cryptographic way to prove one way or another if there were Zcash minted or not in this scenario. So I don't know. People, I think, maybe they're going on faith here, but here's where we're at. So yes, big, huge, massive wick down. I don't know if you can see this, but I'll kind of highlight it with my highlighter here. It went all the way down to here, all the way down to like this 250 level. It got basically at one point. It's since had a huge bounce. Even on that same day, it recovered, the overwhelming majority of that, 2/3 of it. It's bounced since then. Obviously, pretty big bullish divergence off the back of that because of the big bounce. So clearly the market isn't too worried about it. It kind of held support right in these moving average clouds, which you could say is noteworthy also. It was also pretty overextended too. Maybe it needed a mean reversion, and it got that and then some. So I don't know. Obviously, I'm not going to say this is a buying opportunity because there's the issues that we just talked about, and nobody can know whether this is going to be a problem going forward or not. Certainly the KOLs, I've seen plenty of people posting on X, the big KOLs, brushing it off like it's nothing and calling everybody fools for freaking out. And of course, they're going to do that. So that's up to you if you want to believe them, and sort of follow the price action and jump back in here. But taking that out of the equation for a minute and just looking at the technicals, I like the fact that it bounced here. I like the fact that it's holding up. It almost fully engulfed this. Well, technically it did fully engulf this big dip. Now it's back down since then. It did get rejected off of its 10-day moving average, but it did reset the DMARC count, and the DMARC count is still technically a setup count to the upside, despite setting a lower low here in the last 2 days. So it looks decent from a technical standpoint in terms of like the worst is over, and you might be in for a decent discount here, but obviously take that with a huge grain of salt because we don't know. The exploit is puts a huge cloud over the whole thing for sure.
All right. It's funny that you mentioned like the KOLs talking about it, because as I was preparing for the show, there's one KOL in particular that came up on Zcash, Near, and the coin that I want to go to next, Hyperliquid. So Citrini Research just came out and explicitly called Hype a buy, named it as one of the only crypto assets with a real cash flow profile. If you've been following this show, God, for like the last year now, I think you would have known that as well. So let's look at Hype. It had a very public dip recently, hitting above $73 and then falling So I think 55, maybe even hit 54. I can't remember exactly. It was right there now.
Yeah.
So what's it saying right now to us, Kris?
So a couple things I want to point out here. And this actually came up in the Discord yesterday or the day before. We've got a bit of a head and shoulders pattern here that's formed, kind of like yay, like so. And this is very much, this is real. This is a thing. Also, a big cluster of DMARC 9s and 13s right here that marked this peak here. Then we had a sequential 13 here that flagged. That's kind of marked this head peak, if you will. And then it's been in a downtrend ever since. Right now we're at a setup count 7 on the daily time frame. So this is for sure a rollover. I mean, price is now below both moving averages. We're probably a day away from the 10-day crossing back down below the 20-day, which would be the final checkbox in a daily trend reversal. But I think it's important to look at the weekly time frame on this asset, because look how far above, how overextended it was above just like the 10-week moving average. Like at its peak, I think it was upwards of, or let's go to the 20-day, 47% away from the 46%, 47 from the 20-week, and about 35% from the 10-week. And so that's a pretty big, deviation. I mean, it was way deviated from it. Normally, it just kind of has been riding it up, pretty close to it, sticking pretty close to it. Then we got this huge mega candle on the week of May 18th, and then another big candle the following week that was up another 15%. And even in the next candle, it poked a little bit of a higher high too. So it was very, very overextended on the weekly time frame. So even despite that ugly looking daily head and shoulders pattern that I just pointed out on the daily, we still haven't really come back down to even the 10-week moving average. So you could argue that head and shoulders pattern, that reversal on the daily, was kind of almost needed, like we needed to get that reset. We needed to get that mean reversion to kind of come back to earth a little bit and maybe touch this 10-week moving average, before running back up a bit. So when I look at this on the weekly time frame, I'm not really worried about it at all. Like, I think that was a healthy correction. I think we're undergoing a healthy correction, and I will not be surprised one bit to see it come back down and touch this 10-week moving average, and then it's, off to the races again. So I'm not really worried about, it's big, but it's big because it was so overextended to begin with. And so when you get this far over your skis, it's a long way back down to the ground. And so like, that's what we're seeing here playing out on the daily and the weekly. So I think Hyperliquid is okay. It also tracks with kind of the larger correction we're seeing in other markets, which hopefully we'll have time to get into a little bit later here. But yeah, I think nothing really fundamentally has changed with Hyperliquid. I think the narrative is still there. Clearly, they're still raking in cash, like what you just said, Bijan. So Hyperliquid is fine. This is good. I think this is going to turn into a buying opportunity more than anything.
Yeah, CoinDesk recently reported as well that Hyperliquid is beating Ethereum in trading volume on some days.
Yeah,
which is wild. All right, let's do we check on Venice? I can't remember if we pulled up the Venice chart and saw what they were up to, because they had a pretty big dip as well, I think, recently. So let's see how their chart's doing.
Same kind of thing. Pretty easy technical though. You know, DMARC 9 on the weekly, kind of right down to its 10-week moving average, a little bit ahead of Hyperliquid in terms of its correction. It wasn't as overextended to begin with, but it was still, it was heated to be sure. I mean, well, let's see exactly what it was. So at this peak, it was, actually, from a percentage standpoint, it was actually more. In fact, it was like, just to its 10-day, it was 48%, and then to its 20-week rather, it was 64%. So it was indeed more overextended than Hyperliquid. So not surprised to see this either. Same exact dynamics that we're seeing, basically. I feel good about this though, because if we look at the RSI, we're not seeing a bearish divergence on the RSI here. It's tracking well. It's tracking with the price. So there's still momentum in this chart right here, even though it's correcting, which again it needs to. Like, let's see what it looks like on the daily. Kind of a similar, not a head and shoulders per se, but still a choppy bit. You know, kind of just like the Hyperliquid. Also at a DMARC 7 on its daily setup count, which is probably not a coincidence. They're kind of the same in that regard. So I would put the two, from a technical standpoint, very much in the same category. They're both. It looks like they're both more correcting from just technical dynamics than anything to do with their fundamentals at all.
You know, one thing I like about Venice, just from like just outside of the technicals, just like from just I guess what they actually do, is like they're private. It's a private AI inference, so like your prompts stay on chain, it's censorship resistance, and I think like that part flies under the radar as like you see more of the government kind of getting involved with some of these major LLM players. Something like a Venice now becomes, you know, with the rise of the privacy coins, like I could see something like Venice also catching on that narrative in addition to like the AI stuff. So that's really cool about Venice. Speaking of AI, I don't even know how new this is, but I just saw it on the market cap, which is Beat, BEAT, Audiera. So it's a Binance-backed coin, or it's on BNB chain. So it's an AI music and gaming platform on BNB. So users can earn this coin through AI-powered music creation and like some type of gaming. So this one's up like 1,000% in the last 30 days, which is wild. So I wouldn't say buy this, obviously, but like I just wanted to know what the hell is going on with this coin.
I mean, yeah, like you say, it's completely ripped. It's gone from under $1 or wherever, you know, up to $6. Funny, it's only at a DMARC 8 on the daily setup count. But yeah, I mean, it blew up massive. You know, like we say, we know not to chase these. Funny though, I like how the volume was just, you know, nil basically until whatever, a few weeks ago, or a few days ago rather. Yeah, I don't know. We know the deal with these. These are just kind of funny. These are lottery ticket kind of gambling, fun, whatever. Something that you put lunch money into, but not much else beyond that. I don't know what's going on with it though. I don't know anything about the token or the project, but that's funny.
It apparently got a Binance alpha listing, and that's why it just all of a sudden just started ripping out of nowhere. Because like you said, like look in at the beginning of 2020, like heading into 2026, look at those volumes, and then literally nothing up until like earlier this month.
That's funny though, because the Binance Alpha listing isn't even like a full Binance like centralized exchange listing. It's like it just means you can trade on a DEX on the Binance platform, but it's not actually using like the Binance order books or the centralized liquidity or any of that stuff. It's still you're trading on a DEX, kind of like how Coinbase uses Aerodrome behind the scenes to trade stuff on base chain, you know, like with certain assets. They're not fully listed on Coinbase, but you can still technically use the Coinbase app to trade these DeFi tokens on base chain using Aerodrome behind the scenes. Same thing with a Bitcoin or a Binance Alpha listing. So not to me, that's like, yay, whatever, who cares? But apparently people love it and bought in on that based on that. So that's funny to me.
Yeah, I mean, there was a period where like my YouTube algorithm was just showing me all like these AI music mashups of like, you know, old school like songs mixed with new school beats. It was pretty good, but and anyway. Kris, so there's something trending on X right now because crypto is obviously not doing so well. So a trending question that's been going on is, what crypto would you touch right now? So we went through a bunch of charts, and I know there are a few that you like right now, right? There are more that we're definitely iffy on. But if you had to pick just one of them right now that you had to buy, which one are you going to pick based off of the chart that you, I guess, feel the most optimistic about?
I probably would go back to Venice. Venice or Hyperliquid, honestly. I'm not seeing anything else in the crypto realm that makes me want to go anywhere near it. And maybe not even, I would wait too, because both of these are sitting at a 7. Maybe they got a couple more days before they're fully exhausted in the case of Venice and Hype. The only reason I said Venice over Hype was because on the weekly time frame, it was already at its 10-week moving average, whereas Hyperliquid still had a little ways further to go. So that's literally the only reason why I said the one over the other. But that's pretty much the only thing I would even consider buying right now, honestly.
Can we take
because again,
oh, sorry, go ahead.
No, I was gonna say, because again, they're the only thing that are just, they have a narrative outside of crypto. They have true either AI and or it's TradFi connections, and that's what they're benefiting from, you know. Yeah. And they give money back to the token holders, like in a big way. So yeah, let's look at Per.
Yeah, because I'm wondering about Per in particular, because there was obviously it's a beta to Hype, right? It's a digital asset treasury on Hype, but I'm not sure anymore if it's like the beta that we were hoping that it would be. But well, let's see at the chart.
No, like, you're right. It's not.
The deal with holding these betas is it goes up more when Hype pumps, right? And then it'll obviously go down less when Hype dumps. But I don't know if it's going up that much more than Hype to make it like worth that risk reward. Perfect. Yeah. Per versus Hype. That's the one we need to see.
I mean, it's basically tracking sideways, you could say. It's just, it is higher beta because there is clearly some oscillation here. But it's not losing out either. I honestly think it's pretty even, you know?
Right.
It catches up well. I typically have seen a number of instances where, say, like over the weekend, Hyperliquid would go up whatever 10, 15%, and then Monday rolls around and like here was an example. Monday came around and Per jumps up 15%, you know. So it generally tracks well. We know Hyperliquid itself is in a bit of a contraction right now. So not surprised to see this. It's not really any worse. I mean, it just like the Hyperliquid token, it's still just a tick above its 10-week moving average. So it's largely the same. I feel comfortable continuing to hold it personally. It's easier because we still don't technically have access to the Hype token. Well, no, I'm sorry, we do. Now we can buy it on Coinbase. Yeah,
that's kind of why I think Per might have lost some of its luster, right? Because you could buy it as a stock, whereas it was a little more difficult to buy Hype. But then once Hype listed on Coinbase, I don't have any data to back this up, but I feel like that's kind of when the outsized returns stopped happening.
Perhaps. I think the one distinction, though, is you're still not going to get institutions coming on Kraken or Coinbase to buy Hyperliquid. They're still they have an easier way through Per to do it because they can do it through major brokerage accounts, OTC in size, you know. And so, yeah, I still think Per is viable in this scenario. I think it's just undergoing a correction, just like Hyperliquid. It's not that far deviated from it, and we'll see. We'll see how it goes, but it looks okay right now.
Yeah. To just follow up on my question that I asked you, I would also pretty much be a hype only buyer here in crypto. So Combs, he had a question. I mean, we answered this at the beginning, but just to kind of repeat it, because I'm sure a lot of people are going to be thinking about this, especially with these levels. Kris, how do you feel about DCAing into top quality coins like Bitcoin and ETH? These aren't going away anytime soon. So wouldn't it be a good idea to nibble some buys, or do you wait before it goes fully into a bullish structure?
Honestly, the only one right now is Bitcoin for me in that setup. I feel like the other alts, the big layer ones, there's still a lot more uncertainty surrounding them. They could easily go down significantly more than they are. Like, sure, if you're DCAing, you're continuing to buy lower, and that's fine. But because of how I illustrated the timing band that we're working with at the top of the show, I feel a lot better about where Bitcoin is going to be in 3 to 4 months than I would about where Ethereum or Solana or SWI is going to be in 3 to 4 months. I agree that they're not going away, but that doesn't mean they can't still go down significantly more than Bitcoin in that time span. And so, yeah. And even, like I said, even with Bitcoin at the top of the show, I don't know that, I mean, I could just as easily make a case it goes down another 10 grand too. So yes, DCA, but don't think you got to get it all in right away. Like, scatter that out. I mean, make your buys a month apart, you know, or weeks of every couple of weeks. Throw a few chips in, you know. Don't feel like you got to do this every other day or anything like that. Like, really, really stagger it out a long time, because I'm not certain. I'm never certain of anything, but I think there's a highly probabilistic scenario where this takes 3 to 4 months because of the reasons I illustrated at the top of the show. I just don't see a mechanical situation where we're going to be off to the races sooner than that. And so you've got a long time to spread out those DCA buys, and there's a very real possibility that we could dip into those lower ranges between now and then. So I think it's way too soon to be jumping on ETH or Solana or SWI or XRP or BNB or any of those big ones. Yes, they're not going away. I totally agree, but they also are not done bottoming either, I think. And so, yeah.
Well said. Thanks for the question, Combs. Can we have a look at Derive DRV? Question comes from KBC.
I'm assuming this is a crypto. Yes. Okay. Let's see. Derive. Hold on. Is this brand new?
Yeah.
Let me see if I can find something else.
Yesterday.
Maybe it was I'll look at it on a DEX and see if we got more chart. Nope. Try one more thing here.
KBC, what is Derive? If you are, they're responding right now.
Okay, here's some price history.
Options exchange listed on Kraken.
Oh, okay. I mean, fair enough. It's above its 200-day moving average cloud, so credit where it's due there. It's not blowing anything out of the water though either, and arguably it's above this cloud because it's so new, too. Like that cloud didn't really even appear until halfway through last year, whereas a lot of these other ones that unfortunately they had much longer trajectories, so it's harder for them to be above it. But it's mainly plotted sideways. I don't know. Like, without knowing anything about the project, I'm not too taken by this chart. I guess I don't feel like it's got a ton of strength. I mean, the RSI has just been sort of hovering in the middle for a good chunk of whatever the past year. I mean, price has been hovering in the middle too. Like, if we look at the Bollinger Bands, there's not a lot of volatility. It's really been tight bands with a couple of breakouts along the way, but outside of that, it really is just sort of plotted sideways. We had another breakout here, but then again, it's just plotted sideways. So this tells me there's just not a ton of activity surrounding this chart. There's not a ton of buzz. It's not really forming any major directional trend. It's really just chopping sideways. And charts like this that are predominantly sideways are very difficult to gauge what they're going to do. It's much more of a gamble slot machine type thing, because I could make an argument this could go totally one way or the other. I don't really see any strength that's driving a longer term trend. And so I would want to see something like that before I felt really comfortable. I mean, yeah, on the weekly time frame, it looks decent in that there's generally a series of higher lows, but higher highs, it hasn't really shown that it can hold above this level here. So let's look at this. We had this level set back here. It's kind of plotting around it. Yes, it did break up through it last week. It's coming back down now. I think for me to feel good about this, I'd like to see it convincingly stay above this, let's call it 1 cent level. Let's round it up to 1 cent. So if it can stay above 1 cent and it can start to put in on a weekly time frame consistently higher volume spikes above this moving average, then maybe there's something to look at there. But outside of that, it's pretty just chop. It's pretty much just chop. And so, yeah.
Got a producer note for you all. Jamie Coots did recently interview and sit down with Nick Forster, the CEO of Derive, and it just happened about 2 weeks ago. So definitely check that out. I know I need to. And Jamie also wrote a report on Derive, or included Derive in a report on one of his deep dives on March 20th. So if you're interested, check that out as well. Kris, coming up here on the end of our show. So we're heading into the weekend. A lot of stuff, still, up for grabs, or just a mystery with how the market's going to pan out. You never know with the government in charge these days. So what are you looking for to go into the weekend?
Well, we didn't quite get to it, but I'm going to just do a kind of rapid fire through stocks and macro charts real quick, just to kind of show what's weighing on crypto at the moment. So we can see. So on the weekly time frame, these are the major stock indices. We can see all 4 of them kind of hit DMARC 9s on the weekly and are all in a bit of a mean reversion phase right now. Maybe they only come back down to their 10-week moving average and bounce from there. Maybe not, depending on the larger geopolitical situation right now. But stocks are undergoing a short-term correction at the moment. That's also supported by the Dixie has been kind of working its way back up to the top of the range. Sometime we talk about this on the show. I say I don't really care about the Dixie until it breaks out either up out of the top of the range or below the bottom of the range, because it's been stuck in this sideways range for a long time. But it is at the top of the range. Notably, off the back of the big dip we had on Friday in stocks last week, we had a big spike in the Dixie. It's since gotten rejected again at the top of the range here. So maybe that's saying that the bottom is in, possibly, with stocks, not helped by the fact that liquidity has largely been just stagnant and sideways for really since the end of March, beginning of April, somewhere in here. So liquidity is sideways, the Dixie's choppy, and so that's kind of putting downward pressure on stocks. But overall, also we're getting VIX spikes right now, big VIX spikes above 20, which is causing a lot of volatility in stocks, which also coincides with the dip that we're seeing. But I'm not overly worried about any of it. I think it's just a short-term correction because credit spreads are stable, breadth is stable, real yields remain favorable. So I think this is just a technical correction. Stocks got a little bit overheated. We know they've been setting all-time highs for like 8 or 9 weeks in a row. So, despite these ominous headlines that we're getting, so they were due a correction. Obviously, that's reflected in the crypto prices too. But I think everything is closer to the end of that correction than the beginning, largely, and the overall market is generally stable. So that's the kind of bigger macro picture that we're seeing with stocks and crypto right now. I think if you're looking for buying opportunities, wait until probably the end of this week or early next week. I still think there's a chance we kind of come down for the rest of the week. So we'll see how that goes. Maybe I'm wrong. But that's what I'm seeing just from a zoomed out perspective. So I wanted to get that in because I think that that's important stuff to kind of have in the back of your mind too. So we'll end it with that.
All right. This has been another edition of Trading the Markets. Again, if you are joining us for the first time and you're on X, YouTube, or in Yahoo, and you want to ask questions, just join us on Real Vision. You can become an RV Connect member. Join the show, ask your questions live. You also get our weekly AI show, which you may have been aware of, which is our normal Wednesday show. And you also get access to Kris's and Joe Bland's portfolios as well. So a lot behind the RV Connect membership. So join us. Hope to see you guys all soon. And we'll see you on Monday for the world according to AI. So have a great weekend, everyone. Don't fuck this up.